It's day 8 since I quit my CDLA trucking job. I was hauling reefer and dry van, averaging $320 a day. Today, I made $240 trading. Even though that sounds decent, it's not enough. If I'm going to survive as a full-time trader, I don't just have to match my trucking income, I have to exceed it, because not every day is going to be a green day. I was in and out of this trade within 6 minutes with my $240 reward. In this video, I deconstruct my thinking to teach you. You're gonna walk away with something potent. As you can see, I'm moving around on the Thinkorswim app to show you this is real. This is my actual account. I made this money today trading exactly what I'm about to teach you in this video. The market is live. There is no faking the funk. If you want to learn how I do this, I offer a 6 to 8 week ride along. Just like when you had your CDL trainer ride shotgun with you to teach you the ways of the road, I do that for you for trading. Links in the description. The number one thing I don't miss about trucking is needing to ask permission to do things, needing to ask permission to go to one of my son's doctor's appointments. I'm a full-blown adult and I've got to ask permission. What that means to me is that when they turned me down, they were basically saying, hey, Jeff, your personal needs do not come before the needs of this business. So no, you can't go. Oh well. And that's not what my life is about. I don't know about you, but me, that's not what it's about. I enjoy my time and I'm so thankful for trading because there's nothing in between me and the money. I'm rewarded solely by the way I think, the decision-making process that I have, that I've cultivated over many, many years of pain, suffering, and misery. And so I'm so thankful for it. All right, let's break this down. I bought 10 contracts at 9:52 a.m. and I exited my position at 9:58 a.m. 6 minutes for $240, bringing the account value to $3,244. This is day 8 after quitting trucking, and I've got to be real with you, I'm stressed out. When I was working, my average daily wage was $320. So far, I'm averaging $200 a day. That's not gonna cut it. In doing the math, I realized I need to average $600 a day because there's gonna be losing days, and the winning days need to more than make up for those losing days. The objective is to at least beat my trucking income by 2. Later, I'm going to go over 3 key lessons I need you to understand. It'll radically change your perspective on the market. We start out on the daily chart right now. Yesterday, we broke the June 11th high. That's a key level. The market trended up all day. That's institutional buying. See this 45-degree angle? That's definitely institutional money. And yesterday's context is crucial for the decisions that I made today in my trade. The market doesn't reward you for how much money you have or how long you hold on to a trade. The market only rewards you for making good decisions. And context helps you make good decisions. And the context of what happened yesterday is very, very important. So this morning we gapped up still above the June 11th high. This gray area over here, as you can see, that is aftermarket and pre-market. From yesterday to this morning, during after hours when everybody's asleep, the market opens up and international traders start trading. And as you can see, they held up the June 11th highs. Price did not fall, price maintained, and that's very important context. Because price held, that means institutions were still accumulating. If price appears to be selling off, that would be a buy the dip opportunity for me. That's why context helped me make money today. Knowing what happened yesterday helped me make money today. On the 1-minute chart after the market opened, price started to create this upward channel over here, and it ended up trapping all of the longs. And when price sold off in this large red flush, the moment I saw my first green candle, that's when I bought into my position. That's when I bought the longs. This was my buy the dip scenario. And as you can see on the 1-minute chart, it created this V-shaped recovery. At 10 a.m., I knew that Jerome Powell, the chair of the Federal Reserve, was going to talk again. Yesterday, he spoke. Today, he was going to speak again. And I didn't want to wait for that type of volatility because once Jerome Powell starts yapping his trap, whatever he says typically will send the market haywire. haywire, and I didn't want to be around for that. So I exited my position early, 2 minutes before 10. And as you could see, the moment I exited my position, the market flushed right back down. Perfect timing. The future to me is unknowable. I can only make the very best decision that I can make at the time that I make it. And at this junction right here, this point right here, this was a perfect example of that. So I entered this trade down here and I exited up here. A total of 6 minutes. Can you imagine? Most people don't even make $240 a day, let alone in 6 minutes. This is the beauty of trading rather than trucking. Some drivers, it'll take them 10 hours to make this. Let me interrupt real quick to remind you that trading is very risky. Do not quit your trucking job if you are not financially stable. I'm an experienced options trader. I understand totally the risk that I'm taking on. In trucking, an experienced driver reaches that status after a year or two, not after watching a YouTube video. Set your brakes, set your expectations. If you need help accelerating your learning though, you can book me for a 6 to 8 week ride along. Link in the description. All right, so here are the key lessons that I want you to know. In the lesson number 1 is buy the dip. In 2020, 2021, you may have heard people say buy the dip. That was the thing to say because the market was moving in one direction and one direction only, which was up. When 2022 came around and 2023, the market became more bearish, more choppy. People were still saying buy the dip and getting steamrolled, not realizing they were buying the dip in the wrong context. You should only buy the dip when the market is staircasing up above the 3 EMA, above the 9 EMA, and price is holding a level. Never buy against a longer time frame trend. Only buy alongside a longer time frame trend. I saw that we broke above the June 11th high and we maintained above that level. The market on the daily chart is staircasing upwards in absolute strength. Today, my scalp was aligned with a higher time frame direction, even though I was going against a shorter time frame direction, if that makes sense. That's why this lesson is very pivotal. Lesson number 2. In this trade, I lost $50 due to slippage. If you don't know what slippage is when the market makers expand their bid and ask spread. When they do that, it costs you more money to enter and exit your position. The price that I requested to exit my position at, I did not get filled at that price. I got filled a nickel cheaper. A nickel in options term is $5. Multiplied by 10 contracts, that's $50. Ultimately, if I got filled at the price that I wanted to get filled at, I would have made $290 instead of $240. This is a key lesson because the more money you try to enter and exit with while you're scalping, the more it could potentially cost you because the market makers will expand the bid and ask against you. If you don't pay attention to slippage, it could be the difference between a mediocre trader, unprofitable trader, and a wildly successful trader. So it's important to understand slippage. And I got slipped bad on this one in particular. $50. That's just, man. Key lesson number 3, mental stops. I don't place stop orders with my trades, especially with scalping, because market makers see my stop order. I don't want them to know what my next move is because if they see a resting stop, they'll just go there and stop you out and take your money. I keep mental stops. But the problem with mental stops is that if you're undisciplined, you will drift. Your thesis will drift. When the market starts to move against you, you'll say, let me give it a little wiggle room, or let me wait and see what happens. That's an insidious thought. The solution I've discovered to be really effective is mantras. A mantra is something you repeat to yourself. I repeat my exits over and over and over again. When I'm in a trade, 2 things are going to happen. I'll either take profit or take a loss at my mental stop, a stop that I already preordained. Before I enter the trade, I know where I'm going to exit. Once I'm in the trade, if it starts to move toward my take profit, I start saying my mantra. I'm going to take profit at this price. When price starts to move against me, I really kick up the mantra. Let's say price is at $3 and I'll have a $2 stop. As price starts to fall, 275, 250, 240, 230, 229, 227, 226, 225. I start exit at 2, 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 exit at 2. That mantra occupies my mind so no other thought can enter other than what I'm about to do. which is exit at my stop, exit at 2. This mental tool allows me to honor my stops. There is no negotiation. I know where I'm going to exit before I enter, and once I enter, I will exit exactly where I planned. No moving stops, no nothing. If you've ever traded before, you know how psychologically the market can mess with you. I have a series of mantras that I repeat to myself to negate the psychological warfare that the market bestows upon us. Those mantras literally serve the purpose of taking up space in your mind so that no other insidious thought can occupy that space to make you do things you don't want to do. Because thought precedes action. If you think something and hold the thought long enough, you will inevitably act on that thought. You cannot hold two thoughts in your mind at the same time. That's cognitive dissonance. I mentally override my lizard brain by repetition of what I actually want. When you hold the thought long enough, it manifests into pure action. In high repetition, as price approaches my mental stop, I'm repeating my mental stop like 1,000 times so that when I'm in a trade, there's no overriding my plan. I'm either going to get out at a loss or get out at a win. That's it, no wiggle room. And it's already preordained. This is so pivotal. If you take anything from this video, take this with you. Let's recap real quick. Context from yesterday really helped me on this trade today. The market was ripping in one direction, and because of that, institutions were still building positions. The market is still bullish. But here's what I've learned the hard way. The day after such a long, strong price move, it doesn't continue as frequently. It typically traps new, naive traders. I was one of them many times until I learned to exercise caution. And that caution that I learned to exercise is the reason why I made a profit today. This is why understanding the context of what happened the day before and the probabilities of what might happen in the future helps you make better decisions. So all in all, today was an incredible day. I hope you learned valuable lessons. And do you have any questions for me? Leave them in the comment section. I'm just curious to know your thoughts. If you need help with any of this trading stuff and you're a CDL truck driver, you can book me for a 6 to 8 week ride along. It's kind of like when you had a trucker trainer go along with you and teach you the ways of the road. It's like that, except I do that with you for trading, where we go over thesis, structure, which equals to strategy. That's the same thing as saying left leg plus right leg equals walking. Win rate by risk reward equals expected value. All of these things, if it doesn't make sense to you now, it will by the end of our time together. So go down into the link in the description and book a call with me. We'll have a conversation. You can also join the Truckers Who Trade community.